I'm here a little early. Hang on, I gotta share my screen. And I'll show you guys some stuff as well. I'm a little early. Oopsies. Okay, can you guys hear me and see my screen? Somebody can just type it out. Can you guys hear me? I'm on multiple streams, so no? Okay. Hang on. I always have issues. Hold on a second, I'll be right back. Okay. Okay, can you guys see my screen right now? Some of you are saying you can't. Also, I posted a little giveaway. You can see, okay, can you guys, you can hear. Am I gonna live trade? Not in Globex, I will not. I live trade on voice chat in Discord daily. Yeah, there's nothing to live trade during Globex, to be quite honest. Sometimes there are nice catalysts, other times I just don't like to play with it just because the volume is so like low. It doesn't make sense for me to do that. Okay. All right, you guys can see it and hear it. So I'll go, let me find the trading resources. Okay, if you guys want to follow along, you can just go to propfirmtrend.com and click on trading resources, which is this little button here. And actually, there's even a quiz you guys can take. I have lost many accounts in Globex as well. That's why I don't touch it. I swear my biggest losses have been in Globex, so I have. It used to be kind of fun when I first started trading futures like 3.5 years ago, coming from options. Um, but yeah, I think there comes a point where you're just like, nah, it's just not worth it. So I want to ask you guys, how many of you are fairly new to trading futures? And because I have a little, like a futures basics that I go over for those that are fairly new or that are um, just wanting to brush up on their skills. I know a lot of futures traders that do not know the basics or the fundamentals, which the thing is, it's crucial if you want to be a profitable trader. So, um, I know when I got started trading futures, like I said, I traded options before, and then three and a half, yeah, 2025, 3.5 years ago, I switched over to futures. At the time, there wasn't really anyone that traded futures that I knew. And when I asked around, everybody was like, yeah, no, futures are for, for the big boys. They're for institutional traders. And that's kind of how I got like, digging deep into it. Um, and then I came across, prop firms um, as well. But even at that time, it was trial and error. So it cost me a lot of money, um, you know, uh, learning futures trading, blowing, evaluations, uh, full porting, or not knowing how to size. So the biggest part of everything is really knowing how to size in. Hi, Fenster. um, so with that said, I usually go through this just because, even if you have been trading futures, there's always something new to learn. And, I'll be quick about it. Months effective value. Okay, I wouldn't say I'm completely new, but I'm currently trying to understand different market sessions and how they move and how months affect volume statistically. Okay, I'll answer all the questions. Oops, all the questions at the end. Um, somebody said I wouldn't be in futures if it weren't for Minx. She was literally the one who introduced me to it. I've introduced a lot of people to it, and I would say over the past 3 years, even some of the biggest gurus or influencers that you see, they were introduced to futures by me. Um, and obviously right now it's a big thing, but like I said, back then it was not. Funny is a lot of people used to make fun of me for trading futures. They're like, "Oh, just stick to options." But 90% of people that have traded options have left options, who have tried futures, have left options, came to futures. Some do both. I think I only know like 5 people that went back to options. And the reason those 5 people that I know, they've never learned the fundamentals. Um, and no matter, like, even in Discord, I think Saul Bay knows who I'm talking about, at least one person. No matter how many times I'm like, you can't just go in and start trading NQ or ES. You need to know how it moves and this and that. He just was adamant he wasn't going to do that. And I'll kind of go over this quickly. You guys can learn how to trade with your own money. You can do both. You can trade, with um, actually, you don't need very much capital if you just want to, set up an account. Um, so I'll go over that, and then I'll try to get into some other things like risk management and all of that. Let me just quickly grab something. Okay, and I'll answer any and all questions at the end. So if you guys have any questions, just write them down. I'm not going to read through the chat because I've got ADHD and I'm going to get off track, and then it's going to give me a little while to figure out where I'm at. Alrighty, so futures trading. So what are futures? So futures trading is a contract between a buyer looking to invest and a seller where the contract is made for the future and has an expiration date. There are two participants, hedgers and speculators, and hedgers protect their assets from risks, and speculators are usually floor traders. So as retail traders, we are considered speculators. Futures contracts are available on 5 different assets: equity index futures, interest rate futures, commodity futures, currency futures, metal futures, and they all have expiration dates. Your broker, whatever you're using, for example, NinjaTrader or Trade-O-Vate, they will automatically prompt you to roll over your contract, as you can see kind of in this little example. And so will TradingView. So, for example, equity index futures, they typically expire on a third Friday of every third month. So they're expiring this Friday. So right now we've rolled from December over to March. So right now we're trading the March contract as it has more volume compared to, we can still trade December up through Friday, but the liquidity is pretty low and you're going to not get the best fills. So it's best to switch over to the March contracts. If you're trading, commodity futures like oil or metal futures like gold, currency, whatever, those expire monthly. So same thing happens. You need to roll over your, futures. So the purpose of this is basically to teach some of the fundamentals of how futures work and how you can trade them on your own account and how you can get, funded futures accounts. Since I believe that many would benefit from adding futures trading to their skill set. So some of the terminology, I'll kind of go quickly over it. You don't need to know all of these, but at some point you will hear it. So lot or contract is the unit of the instrument. So if I say I'm in, 3 lots of NQ or MNQ, it doesn't matter. That's just what that means. Tick is the smallest price movement that a futures contract can make. And a point is a $1 move and $1 or $1 handle. Globex is an electronic trading platform used for derivative futures and commodity contracts. And traders also use the term Globex to mean the overnight session of the market. So right now, people are trading Asia, and they're going to say, I traded Globex. And then the regular trading hours for a specific exchange or market center, typically during the New York Stock Exchange open. So margin is the amount of money required to be deposited by a trader to open a futures position. You guys can read through the rest of that. There's not, a whole lot of there. So first up, the market is essentially futures, and we're going to discuss ES, which is the S&P 500. And although these futures are traded similarly to other derivatives, leverage is what they offer above all else. So futures trading is simply a very leveraged form of stock trading. So to contrast with futures, an E-mini S&P 500 contract offers roughly 32 to 1 leverage. And because ES trades in ticks, aka 0.25 spread, one contract changes value by $12.50 for every 0.25 it moves. So you gain or lose $50 when ES moves 1 point. So if ES moves 10 points, then you're going to win or lose $500. Also, these trade in a manner more akin to shares than options. There's no theta, there's no IV. Stop losses can be placed at precise price points, and each futures contract has its own specification, including the size of the contract, the tick size, which is that minimum price movement, and the delivery date. Also, micro E-minis are 1/10 as small as E-mini contracts of the same type. So to provide an example, the S&P 500 E-mini utilizes a $5 multiplier, whereas the E-mini version employs a $50 multiplier. So if you look here, I just went over the ES mini. Now the ES Micro, which is the MES, so it's got an M in front of it, this one changes value by $1.25 for every 25 cents it moves, or every 0.25, which is $5 per point. If you look at NQ, it's $20 per point or $5 per tick. However, the micro version of it changes value 50 cents per tick or $2 per point. And then there are 4 ticks in one point or in each point when you're trading ES and NQ. However, if you're trading oil, 1 CL changes value by $10 per tick or $10 per 0.01 cent. So each penny is a tick and it's worth $10. So if oil is trading at $60 and it goes from $60 to $61, that $1 move is $1,000 because there's 100 ticks in oil. So compared to 4 ticks in the ES and NQ. So typically what I see, many new traders jump in, they jump straight to trading ES or NQ, thinking they're just trading futures, when the risk is equivalent to trading the full index value. So they don't realize that trading NQ is like trading NDX, or trading ES is like trading SPX. So if you were an options trader, and let's just say you had a $2,000 port, and you jumped in to trade SPX or NDX with that port, I don't have to tell you what's going to happen to your account. We all know what's going to happen to that account. It's going to blow up. And instead, most traders should actually be trading the micros, which is the MNQ, which is more like trading QQQ. Or if you're trading, the S&P 500, so MES, which is more like trading SPY. So it's just 1/10 of the risk, when you're trading the micros, okay? Bottom line is, don't trade NQ when your account size says you should be trading MNQ, and don't trade ES when you should be, in MES. So futures market is open 23 hours a day. You typically must close out your positions by 4:59 p.m. Eastern if trading on funded prop accounts. It opens up on Sunday at 6 p.m. Eastern, closes Friday at 4:59 p.m. Eastern. Best times to trade are during the New York Stock Exchange or during the European markets, in which is in the middle of the night. That's when we've got more volume. And you also need to check during the holidays, as the hours may vary. It's like, for example, for Labor Day, we opened up at 6 p.m. Sunday and closed at 1 p.m. that Monday, while New York Stock Exchange was closed. So it's not the same hours. This right here is more like a little cheat sheet. You guys can look at the comprehensive futures contract specifications, each the description, what the ticker is, the minimum tick size, the dollar tick per tick. So you can kind of go through and see, if you're trading wheat or soybeans or silver or gold, whatever it is, you can check through that. So basically, the distinction is when you purchase or sell a contract, you're not purchasing ES shares. Therefore, it costs the same amount of money to buy or sell one contract, regardless of the price at which ES is trading. And margin is a term for this. If you're using traditional brokers, so I'll go over different ways of you guys getting funding. So I'm going to start with funding your account with your own capital. So one way is to trade micros. So if you've got like Interactive Broker or TOS, micros roughly cost about $2,347 for an MES lot, and about $23K for a 1 ES lot on TOS or IBKR. And you want to check with your broker how much capital you would need for these. A second way is to utilize or use a broker that specializes in futures, and that would be, NinjaTrader, Trade-O-Eight, AMT. Um, I'm sure there are others. You just have to kind of look it up. But instead of the $23,448 for an ES slot that you would need like for using the traditional brokers, Trade-O-Eight offers a $500 to $1,000 day trading margin for E-mini contracts. And micro contracts are even more affordable. So MES costs only $50 day trading margin, and MNQ costs $100. So this is for day trade margin only. If you're a swing trader, so let's say you want to swing from a Friday to a Sunday, then you would need to have the initial margin. So let me go over that. So basically, Trade-O-Eight offers, Trade-O-Eight and NinjaTrader both, they offer reduced margins for both the day session as well as the overnight session. So what that means is that if you see here where it says day margin and then initial margin, reduced intraday margin are currently available from 6 p.m. Until 4:45 p.m. Eastern. Initial margin, which is this amount here on the right side, is required between 4:45 p.m. Eastern until 6 p.m. Eastern. So for like an hour and 15 minutes, if you were, I don't know, let's just say you were wanting to hold NQ, you would need over $33,000. Just for that hour and a half. Or if you're like a swing trader, you're wanting to swing NQ over the weekend, you would need to have the initial margin, whatever that amount is. However, if you are more of a day trader or a scalper, you can enter a trade at 6 p.m. Eastern, and all you need is a day margin, which is the $1,000 for NQ or ES. Or if you're playing with the micros, you would just need $100 for like MNQ or MES. So you can do that from 6 p.m. Eastern and hold it all the way, until 4:45 p.m. Eastern the next day. So it's almost 23 hours. So for me as a day trader, as a scalper, I don't need to hold for that hour and 15 minutes and just for one contract have $33,000 in the account. Most get utilize the day trade margin. So let's see. Also during news, so like CPI or FOMC, the margins might be different. So you'd want to check with the broker what that is. I think the account minimum is like $250 to open a Trade-O-Eight account, or maybe $100. I'm not 100% sure right now it's one of the lowest in the industries, but so there's that. And the third way is to trade with prop firms. So basically with prop firms, you utilize a finance partner, also known as, Tradeify, Apex Trader Funding, Take Profit Trader, Futures Desk, Top Step, My Funded Futures. There's so many out there, okay? I'll go over a few of them. Tradeify has a 1-day pass. Top Step has a 2-day minimum evaluation. And for example, Take Profit Trader has a 5-day evaluation. However, the difference with Take Profit Trader is that you are able to withdraw once you pass the account and you meet your threshold, you're able to start withdrawing the money daily. So whereas the other firms, it's not a daily. Well, actually, Tradeify does have daily ones. They just started a week ago to withdraw your funds daily. So a lot of these firms have different types of accounts, and basically how this works is you demonstrate to the prop firm that you are a successful trader. You must pay to enter the evaluation, which is a SIM. Okay. If you succeed, you will then be given a funded account to trade with, which is a funded SIM account. You pay the activation fee. Now, some firms don't have the activation fees. It just depends on the account and the prop firm. But this here is from like Apex. You keep all of the proceeds up to $25,000. You keep 90% of the profit after the first 25,000 that you earn, while they keep 10%. Um, some people get multiple accounts when on a discount so they can trade them at the same time or rotate them. There is a trade copier you can utilize, and each account must pass the performance evaluation, as they're all standalone accounts. So, is this too good to be true? Not really. Most traders fail due to lack of discipline, and this is how these companies make money. And I don't care if you're trading options, futures, crypto, equities, your money, a prop firm's money, your grandma's money, 95% of traders fail. And if you can trade the chart, such as price action, stay disciplined and consistent, then you will make money. Okay. Um, this, you guys, I'm sure, have seen, you know, all over people withdraw money all the time, but they're also consistent. And the worst that can happen is you lose your account evaluation fee. So you don't pay back any capital. Um, and you can also take these evaluations as many times. It's not just once and that's it. Also, some firms have where you skip the evaluation and you can go straight to it's called straight to sim funded. So whatever you make in that account, uh, you know, uh, as long as you're following rules. Let's go to Tradeify so I can show you guys. Pricing. Okay, I'll go back to this in just a bit, but so there's different types of accounts. Now, this right here is from Take Profit Trader. Why prop firm versus trading your own money? And simply put, most traders are undercapitalized, and you level the playing field by using their accounts, not your own funds. So basically, leverage. Okay. Trading your own funds can lead to severe losses. However, if you're using Take Profit Trader or any prop firm that is a good prop firm, your losses are limited to your associated challenge fees. Also, lack of discipline haunts traders in the risk management system and rules that they implement. It makes sure that you stay disciplined during your trades. Also, all the technology and account setup done by them, no more documentation or any painful account setup experiences. So all of the data, it's all basically included with your accounts. So in my opinion, the greatest, if you want to just test it out, although they have very tight regulations, you are essentially forced to have good habits by these rules. So I just pulled up, hang on a second, Tradeify. Let me pull up a few other ones. Just to show you guys some of the difference. Okay, because it's going to loop back into the difference between these accounts. Okay, I know I just had Tradeify up in the other one, but I'm going to just do this. Apex Trader. Okay, so most of these firms, where is their product? Let's go to Tradeovate. Let's just pick a 50K account. No. All right. Let's go down here. Okay. So most of these accounts, the profit goal is I'm just going to use a 50K account, okay? The profit goal is $3,000. Your trailing threshold on this is with Apex, is $2,500. Um, you're able to utilize 10 contracts of minis or 100 contracts of micros. Please don't ever do that. Just because you can doesn't mean you should. And this is the reason why they have, the 10 micros or 10 minis or 100 micros is because once you pass, you get the same contract amounts, but as you're building your balance, if you have an account that you're able to just utilize, let's just say three contracts, then and you built a big balance, they don't have a scaling plan. So if you see here where it says there's no scaling, other firms have scaling. So it's up to the trader to do, what they want to do, obviously with it. So um, let's see. Okay. Also, they've got all of their accounts right now are $39. So even the 300K, 150K. Then let's go to Tradeify. Tradeify has 3 different plans. They've got a select plan where basically your profit target is 2,500, your end of day drawdown is 2,000, consistency is 40%. This is an evaluation, okay? Once you pass this, you can choose a path, whether you want to do daily or flex. So you can take out money daily or every 5 days. It's up to you. You can choose. Their growth account is profit target is 3,000, end of day is 2,000. And then they've got the straight to sim funded, which means that you can skip the evaluations. So once you get this account, there's no evaluation. You're funded instantly, and your payoff frequency can be every 5 days. So you build your balance in here, you follow the rules, you're gonna, be able to pull out the discount or you'll be able to pull out the money out of it, right? So, and then the third one is called the Futures Desk. They've got a static account, which is, and also customizable plans. So technically what they also have an end of day trading, but static is probably one of my favorite, and I think most traders will agree. But so you can customize, what you want, how you want, how many days to pass, things like that. But once you pass daily withdrawals with them, there's no maximum. If you make, and this is not going to happen, but just say, if you make, 100 grand the next day, or once you pass, you are able to pull your money out. So they've got daily withdrawals. Like I said, there's no cap or max, whereas other firms have like a maximum amount you can only pull out. So what you want to do is basically read the rules. A lot of these firms are very similar when it comes to, the profit target, drawdown, things like that. So that's why I pulled that up. So this is very something that you need to understand. This is where a lot of people don't understand, which is called drawdowns. And there's 3 types of drawdowns. So it depends on the way you trade. We're not all the same. We trade differently. I can pretty much trade any of these accounts. To me, it doesn't matter if it's an intraday trailing, end of day, just the way I trade. Okay, so basically the drawdown is the maximum loss you're allowed to have before your account gets breached. So intraday trailing, your drawdown limit moves up with your balance and unrealized gains throughout the day, but resets to the daily starting balance each day. So let's just say you have a 50K account. Your profit, your drawdown is 3K, and day starts at 50K, drawdown 47,000. So let's say at 10 a.m. you make $500 profit, which is 50,500. Drawdown moves to 47,500. Say at 11 a.m. you make another $300. Your balance is up at 50,800. Your drawdown moves to 47,800. 1 p.m. you open a position with $600 unrealized gain. So your account is up at 51,400 unrealized. Your drawdown moves to 48,400 because it trails the unrealized gains. Okay. 2:30 p.m. Let's say you close your position for $400 profit. Your account right now is 51,200. Your drawdown stays at 48,400, and it doesn't go down. At 3 p.m., let's say you lose $400. You're at 50,800. Your drawdown stays at 48,400. It doesn't go down. Your remaining drawdown is $2,400. This is best for people that take, they're fairly precise in their entries. They take base hits, because once you do get over, so this drawdown is, $3,000. So once you get over the, let's say 53,000 plus $100, then the account becomes static. So if you make, I don't know, let's just say 10 grand or 20 grand in this account, this trailing is going to stop. It stops at once you're funded, okay? Stops at 53,100, and it's not going to trail up anymore. End of day trailing, your drawdown limit only moves up based on your ending balance at the close of each trading day. So for example, 50K with 6%, which is, again, let's do the 3K. Your day one starts at 50,000. Your drawdown is 47,000. Total drawdown available is 3,000. During the day, it's up to 51,500, then down to 50,800. Drawdown is going to stay at $47,000 all day. So your drawdown available is $3,000 because it stayed fixed all day. So the next day, day two starts at 50,800. Your drawdown is 47,800, which is $3,000 from new starting balance. So your total drawdown available is 3,000. Static drawdown. So the intraday trailing, it turns into a static once you pass that drawdown limit plus 100 with Apex. But basically, the way it works is your drawdown limit is fixed based on your starting account balance, and it never changes. So for the futures desk, for example, I have a 6K static, and it's going to stay at 6K. So when I continue to build my balance, it's never gonna, that it's not gonna move. So what that means is that account starts at 50K, drawdown is 47. Let's say week one you grow to 55,000. Your drawdown stays at 47,000. Month one you grow to 60,000. Your drawdown stays at 47,000. Month six, your account is at 75,000. Your drawdown is still going to be at 47,000. So you can see it's never moved. Okay. Now, reality check, if you lose $28,000, you can still breach the account. So technically, all of these firms are similar when it comes to, the profit target. Some firms have consistency, and I'll show you guys what that is. During the evaluations, some have it after the evaluation. So it just depends. And let's see, detailed version. Oh, okay. Here, I don't know where it just got clicked on, but you can compare some of these firms. So let's say Tradeify. I don't know, let's just do 50K, 40%. compare it to Top Step, which I'm sure you guys have seen all over the place. Top Step is having serious platform issues. So, for the same profit target, $2,500, drawdown is 2,000, end of day trailing, same thing. Top Step, 3,000, profit target. Oh, actually, I forgot. The select accounts on Tradeify is actually $2,500, so it's not 3,000. So it's a little bit less. And the drawdown amount is 2,000. And drawdown here is 2K. So the difference, you can actually go in here and check the, the final price difference. You can also add different firms, whatever it may be, but also you can just use the same firm with like checking to see, I don't know, let's go to Tradeify and pick 100K and, to see what the difference is, right? So, all right. Where am I? I need to get back to that where I was just at. Then I'll get into the risk management and all of that fun stuff. Yeah. Okay. So this right here is the Project X platform, which has been going down. It's owned by TopStepX, and it has been having issues since October. It's been going down, and people are losing a lot of money. I don't use TopStep. I do have one firm that I'm using. They have the Project X, but I haven't had I haven't had issues today with it. But if you go to a firm, please try to choose Trade-O-Vate or NinjaTrader or something else other than Project X, because it's not stable. So if you guys go on social media, especially on Twitter, you guys will see all over the place. People are not able to close their what is it called? Their positions, or the position, there's like a lag or something like that. But basically, if you're going long, you would just buy, market or join bid. If we're going short, if we think the market's coming down, you're gonna sell market, join ask. It's pretty simple, and that's why people liked it. So TopStep only has Project X, whereas most other firms like Tradeify, Lucid, Funded Futures Network, they have NinjaTrader and they have Trade-O-Vate. So you can actually pick something else aside from this right here is NinjaTrader. Same thing. If we're going long, buy market, buy ask, buy bid. We're going short, you're gonna sell market, sell ask, sell bid. I prefer NinjaTrader only because I can use order flow footprint, which looks kind of like this. And you do not have to use order flow footprint. Most people do not. I would say 95% of traders don't use it. But this is kind of what gives me more of an edge. When I am trading around my levels, I can see, the aggressive sellers and buyers coming through, especially if it's around my level. And so it's kind of like being able to see inside of a candle as it's happening. It's like an X-ray type of I guess in a way you can kind of see. And then Trade-O-Vate is fairly simple to use, which looks just like this. Same thing. Buy market, sell market, buy bid, sell ask. You can actually get Trade-O-Vate accounts. and connect them to your NinjaTrader. So that's kind of what I do. I'm able to connect different prop firms on my NinjaTrader. So as long as I choose the Trader 8. But I also have a NinjaTrader lifetime license. So, and you guys can go back through and like take this little quiz to kind of show, but let's get into some of the actual stuff. Okay. Oh, okay, hang on a second. This is my, okay, so this is just over the past, since Friday. These are my, today I had 45 trades between all of my accounts. So, where is it? So see how here it says consistency is 21.8. So if I'm trading a firm that has a consistency, this is where you would need to look at the number. If you can import your, just go to your and export CSV and then import it here, and it will just kind of have your. This is all free, guys. By the way, all of this in this that I've had built is free. And it's not like a um, I don't know, Tradezilla or whatever you want to call the journals that you pay $50 for, but it does the job. It's very um, easy, user friendly. If you do want to have something like Tradezilla, this is actually even better, and it's free as well. Um, it's called Insight Trades, and you get 30 days free. And then after the 30 days free, you get 3 journals for free, if you guys go through my website. So, all right, let's see. Risk calculators. So this here I have it as a reminder that small daily gains add up. Okay, $20 a day might be a little hobby. Um, you know, there's 252 trading days. It's 5K a year. 100 days, that's 25K a year. $500 a day is 126K a year. If you have different, let's say you have 2 or 3 or 5, 10 different whatever prop firm accounts, and if you just use the micros and you build like in each account $100, okay, you can get to $500 a day. It's not that hard. The issue that starts to happen, and this happens to me, and I see this happen to other people, is greed, okay, and position sizing. So let's get to position sizing, okay. Let's say you have a 50K account. So I like to play with the bigger accounts, but let's just say we have $2,500. This is a 50K account, okay? You have $2,500 drawdown. Typically, your risk per trade should be anywhere 2 to 3% per position, okay? Not per day, but per position. However, if you have a pretty good setup, 5% is okay. Stop loss, okay, let's do M and Q. Let's just say you have a 50 tick stop loss. Okay, so technically for this 50K account, you should be sizing in with 5 micros. Okay, you're risking $125. You can have 20. Let's see, is it 20? Go down here. Risk to reward, let's just say 1 to 1. Okay, so even with this, you can have 20 consecutive losses until you bust your account, right? You know, if you 3 losses, you're gonna need 3 wins to recover. 5 losses, you know, you just kind of have to uh, do that. If your risk to reward ratio is higher, then obviously this number is going to change. Consistency rule. So if you are, for example, trading Top Step, okay, or to even take Profit Trader, and they have a $3,000 consistency, okay? Sorry, 50% consistency. What am I talking about? They have a $3,000 profit target. It means that you know your biggest P&L should not be more than $1,500. So let's say you one day you make $1,700. Then your balance you're gonna have to make more, you know, $3,400. Or if you're making, I don't know, let's just say $700. That's, you know, you're definitely under that 50%. Okay. So here you can kind of see some of the prop firm rules, how they have consistency. It depends on which accounts. I actually need to update some of these. So growth calculator, you can go down here and input, you know, if you have a starting balance, let's just say 2K, and you risk 2%, your win rate is 50, you know, percent. Take 3 trades a day. If you do 2-to-1 risk, if you do 1-to-1, you need to have like a 60%, oopsies, or more hit rate. If you do 2-to-1, then you need to have at least 50%. And here it's going to tell you kind of, you know, profit per trade, daily profit, and then how, you know, after 1 month. So look, even on this on the $60 a day, after 1 month, after 21 trading days, let's just say you're pretty consistent, that's $3,000. After 1 quarter, after 1 year. Now I'm not going to enable compounding because most of us don't compound, but it would be nice even with that, make 3.4 million a year. But you can go in here and kind of look at that and play around with it. Let's see, risk psychology, blowout calculator. $2,000. So here it's going to basically tell you, like, you know, whatever your account size is, how much, you know, you're risking, your risk to reward ratio, and then it will tell you, like, if you have 3 losses, how many wins you need to have, you know, to recover. So it kind of goes down here. Break even win rate, even if you have a 9% win rate, if your, you know, R&R is 10-to-1, you're gonna, you know, be profitable. So you just have to kind of choose what you like. My typical, I have got a tight stop loss, but my risk to reward ratio starts 1-to-1, and then that's when I start to scale out and continue, like, let my runners run. So I get anywhere between 60% to 80%. I think it depends on which account I'm trading, of a hit rate. So the way I've been able to be profitable is to lock myself out of my account. So if I take a trade, and let's just say I don't know, I'm up $500, $1,000, it doesn't matter. Um, I'll move on to another account and I will lock that one out because if I continue to dabble in and play, like go back in, and then I start to lose money, then I'm gonna try to like size up even more, and then so it's a mindset, it's a psychological thing. So the way I do that is by locking myself out, and I can't go back in. Um, or like I'll go to Pilates or something, but being at the screen all day definitely give like today I was at the screen all day and you guys saw where is it? Yeah, 45 trades. I was at the screen all day yesterday, 39 trades. But look, when I was not at the screen on Friday and Monday, yes, it's obviously it's less that I made, but um, and when it's not like so 45 trades. This is across like 12 or 13 accounts, guys. It's not just one account or two accounts. But let's see. Hang on. Risk psychology. Where's the psychology? Pre-trade. Okay, so this is in the risk management psychology lab. You guys can go in here, evaluate your, have an honest self-assessment. If you're feeling confident, calm, or if you're feeling greedy, vengeful, it's going to tell you not consider to not trade. Okay. Um, and let's just say you have a herd mentality, basically following the crowd without analysis. Jot down your little your biases, and what you're going to end up seeing after um, a certain time, the certain emotions that trigger your whether it's your losses or wins. So as soon as you start having that bias, or you shut off the computer, if that's like if you see that, hey, every time I feel vengeful, um I or greedy, I lose. Those are my big red days. As soon as you start getting that feeling, you walk away, you shut off your broker. Okay. So this is because, there's no one that's going to tell us, hey, stop trading. Or, we don't have a boss. We are basically have to be self-disciplined. And I don't care how much people say, like, oh, don't have emotions. Well, we're humans and we're going to have emotions. And it could be, being frustrated or anxious or greedy. Those are all emotions. And, you just have to know, for me, for example, when I'm bored, I will start taking trades out of boredom, right? Um, and also, like, if I'm getting too greedy, that's when I'm gonna start locking my account. Even though later I'll say, oh, if I went with my full size or if I did this, it's okay because it could have been the other way around as well. Okay. Here you guys can find the firm health, like prop firm health. Um, let's see, match your little um, quick compare. Oh, okay. Actually, if you go down, you can, so let's say you want to sort out, that's what I was going to do earlier and I forgot to do that. If you want to sort out, you just want to do, let's just say static accounts, okay? It will pull up the firms that have the static accounts. It's going to leave other firms out that don't. Or let's say you just want to do end of day. It's going to leave out the firms that don't have the end of day. So you can go through here and just kind of scroll over to the right. So if you click on full details, it's going to give you more of a condensed version of each prop firm. And, like the requirements, challenge. Obviously, all of this can change at any time, so you'd want to really check the website of the, prop firm. But just gives you more of a condensed, easier to read version, whereas like trying to like find everything. You can also do a little prop for match, like a little quiz, the way you trade. Hang on. Trading resources. Okay, so back to here. When I start trading futures every morning, the first thing that I do is I actually go to bar chart, and sometimes Benzinga, and just kind of look to see what's going on with the markets, what the sentiment is. And then I will look at the trading economic calendar. So like tomorrow, we've got CPI tomorrow morning. And, you know, some firms will let you trade through CPI, others will not. Some will let you do it during the evaluation phase, but not during the funded phase. So you want to kind of check on that. Or you can also check Forex Factory. Also, if there are earnings, you know, especially if you're trading NASDAQ, if you're trading MNQ or NQ, it has a pretty big, you know, if Microsoft is reporting, or Nvidia, it obviously is going to have an impact on the tech. Okay. And then another thing that I do while I'm trading NQ, I'm going to have Nvidia, Microsoft, Google, Apple, all of those. This is the Mag 7. I'm going to have them up on my screen to kind of gauge what's going on as far as like, you know, the sentiment. And it helps with like, you know, if you're going short or long. So here I have pulled up my sim accounts, and I'm going to show you guys just the difference for those of you that are brand new. When you execute, you know, a trade, how it, you know, how it basically moves. So let's just say we're going to do sell market, okay? This is NQ, and this is MNQ, okay? Now, notice how it, here it's got ask and bid, and it moves in 0.25, okay? So for every dollar that it moves, okay, let me click here, okay. Where is this here? Okay, so notice how already on NQ, it's, you know, if I went in with more contracts, obviously it's $20 per point, whereas here it's not. So the loss can be pretty fast depending upon how fast, you know, it moves, especially like Globex times, guys, understand, and I'm going to show you. Oh, I already got stopped out. I'm going to show you just how thin. See all these zeros? There's no liquidity. It's like nothing. So that's why like the price is just like gonna jump around and move around. So you don't want to play when there's no liquidity. You're gonna get crushed. There's no point. The market's always gonna be here. You want to have liquidity, but yeah, I mean, you can just basically see how it goes, and the same thing with ES and MES. Where is MES? Let's just say we're gonna go low, short. So each tick is $12.50 on ES, and it's $1.25 on MES. So that's kind of the difference. These are the micros. It's the same thing. Your charts are going to be the same. So whether you're using moving averages, whether you're using Fibonacci, whether you're using pivots, whatever you're using right now for charting SPY or QQQ, that's going to work for, you know, and you can also move your stop loss. Another thing I always say, always have a stop loss no matter what. because you'll be, especially if you're trading the Nasdaq, you're gonna get a move that's gonna wipe you out if you don't have a stop loss. But the thing is, there's no PDT. There's no you can get in and get out. So what, you get stopped out. It's not that big of a deal. You can always get back in. I wonder if I'm missing anything. What should I place a call? Hang on. All right. So let me go back through. Thanks, Fenster. All right, so let's see. Did you ever find out if NinjaTrader Prop or TraderWay Prop have any advanced features coming in the pipeline that they don't already have right now, like the advanced risk settings the Project X currently has? All right, so to answer your question, I don't know if you guys noticed this little lockout here on my screen. I have it. It is not. So this is like the trades that we just took on those sim accounts. So there is a lockout function that that works. It's an added third-party indicator on NinjaTrader. As far as Tradeovate, I am not sure. Tradeovate has it on their, and so does NinjaTrader. If you're using your own like live account, they already have these risk settings. However, if you're using prop firms, they don't. So I don't know if they're going to enable that soon or not. I suppose I could always reach out to them. I do have I mean, I'm pretty good with some of their senior vice presidents. But for now, this is something that I am testing out, and it works great. If you want to be a beta tester, let me know. I don't know why they don't have these simple things enabled for prop traders. I don't work for Tradeovate or NinjaTrader, so I have no idea, to be quite honest. But uh, that's something that is it's a good question. All right, let's see. Okay, I'm on my other streams. See how many of you are on here. $527. Okay. All right. Patience is definitely key. It's just okay. Yep, that's right. I'm here for the giveaway. Okay, okay. How does Take Profit Trader compare to what? How does Take Profit Trader compare to which firm? They're all wonderful in their own ways. I like to have different um, okay, also you guys can click back on this little futures summary of futures basics, and it will kind of help you like with just the key basics that we went over if you need to like look back through. So there are over 200 prop firms, okay? There's new ones popping up all the time. There's about 70 or 80 that are fairly well known. I have vetted about 20 of them. And I'll be quite honest, the ones that are here that are featured, those are some of my favorites. There is also another one that's down here, which is Alpha Futures. And people really like Bullinox. I don't really trade with Bullinox. I did before. It's been a long time, so. But and if you're a swing trader, so like if you want to swing over the weekend, then there's a firm here called Phidias Prop Firm. They have swing trading, actually. I forgot about that one. But so okay, take profit trader against what? Is he still here? If you go to take profit trader, you can kind of just, like, oops, either do like a comparison of whatever firm you want to compare, or you can just go up here and see what the, oops, profit trader, what their account evaluation is, their tests, how many days to pass. Their consistency is 50%. But once you get to the funded, then it is daily withdrawals. Tradeify has just added daily withdrawals to their new plan. Who else has? Futures Desk also has daily withdrawals. Futures Desk has the best static accounts. I will say that hands down, just because it gives you a pretty big, like you can get up to $6,000 static, which most other firms give a very small static accounts. Funded Futures Network, I'm going to be giving an account away tonight for Funded Futures Network. They actually have right now a deal where it's buy one, get one free. And it includes the activation fee as well. So it's like for a 50K account, I think it comes out all in like 37 bucks. It's like 80 some bucks, but like you get two accounts, so it's like 37 bucks or something like that. What other questions do you guys have before I do the little run? Bullinox is solid, straightforward rules, but they do have an activation fee. That's what I didn't like about Bullinox was the activation fee, especially on the bigger accounts. I mean, like I know like Apex has activation fees, but those change like with their promos, and sometimes their activation fees are like 40 bucks. Last week it was like, or the week before, sorry, it was like $6. But Bullinox, I didn't care for their activation fees. Is it possible on one of the problems to start and say January slowly let it grow for the year and do one large withdrawal at the end? Is that frowned upon? No, not at all. I mean, you were able to do that. I personally would take profit, pay yourself, because you can grow like So if you're fairly new, if you get one account, pass it, and then pull money out before you start like copy trading, or it's I hate saying this, it is around the holidays, and this is when they have their biggest sales. not to say they're not going to have sales later, but um, you know, if you get a few accounts, then just take it slow and rotate them. Don't copy trade them because even though it looks wonderful when you have a nice green day across all your accounts, but when you have, you know, all red, you know, basically you can blow all of the accounts and you don't want to do that. So try to like rotate them or maybe trade copy 2 and 2 when you get like familiar, because for the first thing you should really do is get a test account. Uh, and you get that with the prop firms, you know, get a test account and just play around with them. I feel like I'm missing something. Like I missed. I don't know. No, we went over the risk calculators. Yeah, I mean, you know, it's there's no point in building up a balance all year because you know at the end of the day it's not your money until it's in your account. So, alrighty, let me just double check one other stream. This guy said, I don't believe in anything. Okay. Thanks for giving all your fours. Won't talk about the day to day of the actual being a trader. Hold on. On the website, is there any like cheat code for the prop firm with consistency and minimum days trades? What does that mean? What do you mean by is there a cheat code? I will say that this is going to be your cheat code right here. Position sizing, that's number one. If you start out and let's say, okay, let's say you're brand new to futures or even maybe brand new to trading, start with 1 micro. Well, obviously, first start with the practice account, get familiar with the platform. But a lot of times when people play around with the practice account, they don't size in properly. Sometimes they'll go in with like 20 NQs just to see, you know, oh, it's 20K on my account, you know. It, the thing is that's a dopamine hit and you're going to keep trying to get that each time and that habit will transfer over to your evaluation. So use your evaluation to really get consistent. Don't look at the money, don't look at the profit. And I know this kind of sounds stupid to say, but really like get consistent. So start with 1 to 2 micros. Um, and slowly, like if for 3 weeks you are consistent, and consistent does not mean you're going to have uh, green days every single day. You're not. You're going to have um, some accounts. So, for example, with me, and I'll show you guys future, futures desk. Hang on a second, let me log in. So I'm green. I was green. Where's my report? Uh, 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 I'm like so tired. Hang on. Okay. So here's my futures desk. This is so today I had a pretty big loss. You know, you get green, 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 green. You're gonna have red days. That is normal. That's part of trading. You're not gonna have um, you know, and it sucked. I had that, it was, and when I traded it in Globex this morning, and I knew I shouldn't have, but I got a little bored. But so I rotate my accounts, and some accounts are going to be red, some accounts are going to be green. Um, it is not trading is not it's like the easiest, hardest money you've ever made. I don't know how to explain that saying, but it's like we tell ourselves, okay, if I just took A plus setups with a small contracts and got out when I'm up to $300, walked away, you know, you can do that. My son can do that. But what's going to happen is you're going to make $200-300. You're going to be like, how about I make $400 or $500 today? How about maybe $700? 1,000. You're going to keep pushing it. And yes, there's going to be days you're going to make more. There's going to be days where you're going to have losses. And that is part of the game. But try to stick to, like, I had a guy in my Discord where he said, hey, it's been 6 months. I haven't gotten a payout. I'm like, pretty much done. And I was like, okay, well, tell me like what size of an account you're using. It's like 50K account. Um, how are you sizing? He's sizing in with NQ. So instead of uh, so you get a drawdown. Technically, he's risking like I think he was doing 3 or 4, maybe 2 or 3 NQs. Pretty like maybe like 25%. Whoopsies. Maybe 20% max contracts. Oh, no, 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 no. No, that doesn't make sense. So he's risking $750. Of course, you're not going to be profitable, especially when you haven't even gotten a payout yet and you're playing with a smaller account. Even on a 150K account, that's still 15% if you're going in with 3 NQs, right? And you have to realize like not everybody has the same hit rate. So I tell him size down to MNQs. And he did. He sized down MNQs. 2 weeks later, he's posting, I'm getting my payout. And then he's getting his second payout. So your mindset shifts when you size down and become consistent when you're sized down, then you scale up. So you first do, let's just say 2 or 3 MNQs. Again, what you're looking for is consistency. You're not looking for, to make $1,000 a day or whatever it is. What you're looking to see is, hey, on a daily basis, can I make, let's just say $100 or $200, doesn't matter. And let's say you're going to have a day that you red. You might even have 2 days that you red. That's okay. But you can't, your red days can't be bigger than your um, what am I trying to say? Um, your wins. Okay. So let's say you make $200, you make $200, you make $200, and then your one day is minus 1,000. That's not how that works. Your risk to reward ratio needs to be, your stop losses need to be consecutive, and you get that, you're gonna just you're gonna be able to start scaling up. Um, after let's say 5 MNQs, you start to go up to 7 or 8. Um, have a hard stop loss. Take the best trades. Don't play around in Globex or Times, figure out what your A plus setup is. Everybody has a different kind, right? Um, yeah, hold your winners. Especially like if you have an end of day or static account, and if you have winners, I hold my winners. I end up moving my stop loss into like a little bit above break even once it's in profit, and then I'll slowly trail my stop loss between the what do you call it, runners. Oh, oh, Adam, you love their dashboard and everything. Amazing one. Oh yeah, the TFD. Yeah. Okay. All right. The cheat code is YOLO hedging on 1 day pass during news. That is a cheat code for if you want to use like for example, I call it the Temu straight funded. You should not do that if you have not passed an account on your own. If you are brand new to futures, um, but what Solvay is talking about on so for example on CPI tomorrow, you can pass, let's just say Apex accounts. You run some one way, so longs like right before CPI, like 20 seconds before CPI. You calculate the um, how many points and how many, let's just say, I don't know, 15 NQ lots, 30 points, whatever it is, I don't know, the calculation for it. And you do that longs and shorts, you're going to lose some, and you should win on the other ones. That's called the Timu style because it ends up being really cheap compared to if you just bought a straight to funded account. But I don't recommend that unless you are just trying to add extra accounts and you've already passed evaluations on your own. So, all right. Hey guys, that is what I do. I never had payout too. What do you do, Dr. Ahmed? You YOLO? Don't do that. Yeah, you gotta stick. Yeah, you can't. You should not be YOLOing, like I said, unless you are adding, um, to your accounts or something like that, and you've already passed and gotten payouts. But I promise you, go back to this position size calculator. I would, for a pretty good setup, I would risk 5%. So like on a like 5 MNQs. Let's see what it is on 4,500. So it would be 9 MNQs. That's if you have a stop loss of 50 ticks. Depends what your stop loss is as well. Do you find you're less stressed using your own money? I link my accounts together, so I actually feel the same because I treat my accounts the same way as the live. But I will say though, a lot of times what you guys will also notice is that your mindset changes once you get a funded account. And it's like all of a sudden you don't know how to trade. um, so in that case, the way is just size down and have a stop loss, and remember, like, follow your rules. You know, two or three, let's say three losses in a row, you're done. You're not going to blow your account if you're using, position sizing, and if you have three losses in a row, you're going to be just fine because you're going to recover the next day. But if you don't have this and you double your contracts the next time around, you're not gonna, you're just gonna, it's revenge trading. So, and there's gonna be times, guys, it doesn't matter, even if you've been trading for a long time, you're gonna get to have like the, revenge trading, and there's gonna be phases where you make a lot of money, and then there's gonna be months where you don't, where you make some money. So you have to understand, like, that's the difference between like having a job and trading. It's not consistent pay. You're gonna have good months, you're gonna have bad months, you're gonna have good weeks, you're gonna have bad weeks. That's just how it is. Um, so, all right. I am like extremely tired because I've been here for so long, and I'm gonna be on Wolf Spaces tomorrow at like 6 a.m. Oh my god. So let me just draw this. Okay. Daniel N. You guys notice this guy always gets picked? I know, right, Blaze? The fuck? But he's never claimed because he's never here, so. Ami, are you Daniel? Or no? Guys, if you like, just tell me if you're the person or not. You still have to submit proof that you're this person, but no, it's not Solvay. Yes, Adam, that's the same freaking Daniel. It's like he. No, you cannot. All right, let's do it again. Michael C. I feel like I'm in school, like doing roll call. He keeps getting, drawn. I don't know. I don't. This is, um, it's a website that does competitions. But look, Michael. Yes, Mike, you got it. I see you. All right, DM me, please. Let's see how many people entered. So there's 209 entries. Let's see how many users. Hold on. Let me reload. 28 users. So that's how. So only 28 people. So it's kind of easy for the same person to keep getting picked, especially if they did all of the actions. Like, whatever that showed. So, yeah. Yes. All right, guys. Thank you all for hopping on. I hope you all learned something new. Let me know about next time. Um, I don't know, Satish. Can I get a dinner or a 300K probably from? Yeah, I don't know about that. Um, so I know someone should tell Daniel that he should stick around because he keeps winning, but he's actually never getting picked because he never sticks around. Yes, let's get ready for CPI. Get some good night's sleep. All right, guys.